So this is a 5-minute Farm Doc Daily, and we are doing MFP payments and what we should be thinking about as we're setting 2020 cash rents. Over the past couple years, MFP payments have been a very important part of our returns. If you look at our operator and land returns for Central Illinois, in 2018, they were significantly above our cash rent levels. A lot of the reasons why that happened was in 2018 we had $62 of MFP payments. Those MFP payments contributed to our return, and it kept our returns relatively good for 2018. In 2019 we had MFP payments again, actually larger MFP payments. This year we had $20 more in MFP payments on average across Illinois farms, at roughly 80, a little bit higher than $80 per acre in Central Illinois. Obviously, $80 an acre of MFP payments makes a big deal when you're calculating returns. And if we had not had those returns in 2019, we would have much lower returns, and our returns would have been below cash rents, or average cash rents, by about $80 per acre, which is the lowest level it would have been since 2000. So MFP obviously plays a big role in our payments and what those payments look like for 2018 and 2019. Overall, in 2018 and 2019, MFP accounted for 7% of revenue in 2018. 2019, it was 11% of revenue. Again, you're looking at that, you take that off the top, you really reduce returns. If you're looking at those MFP percents of gross revenue in those years, it's roughly comparable back to the 2000, 2001, 2002 period when we had government payments, which included AMPTA, LDPs, and market loss assistance programs. Those years we had higher payments than we do now, but still MFP payments are a significant portion of those payments, and they most likely keep cash rents at a higher level because we can count on those government payments as we're making bids for our farmland. One of the things that's happening now, though, this time around, is MFP payments, unlike in the 2000s, aren't legislated. We don't know what 2020 payments will look like, whether they'll exist at all, or what levels they will exist at. And again, a $60 and $80 payment makes a big difference on profitability on these farms. As a result of that, we're suggesting that there be a clause put in cash rent leases. We would set a base cash rent, and we could set that base cash rent, say, at $250 per acre using budgeted material without the MFP payment. And then if we get an MFP payment, that is shared between the landowner and the farmer. We use an example of a 50% share. If we had an $80 payment, the landowner would get a $40 of additional rent. Again, this is a way for the farmer and landowners to deal with this uncertainty about whether MFP payments will exist. And again, if you're getting $60 to $80 next year, which we don't know, it does make a really big difference on profitability on these operations. So building in some contingencies for the case when and if we get those seems prudent as we're looking at cash renting in 2020.